Hi, Todd VanDenburg here with VanDenburg Capital Management and another Uncommon Sense update. So here we are, we're rapidly approaching the end of the month of May. We've got the Dow, flirting with 25,000 and the S&P flirting with 3,000. Now these big round numbers are important to people who are like trend traders, people who, don't make their investment decisions based upon, the fundamentals of a given company or a given industry. What they do is they look for trends. If the market's going up, it might tend to go up, or if the market goes down, it might tend to go down. Well, these big round numbers like 25,000 on the Dow or 3,000 on the S&P, to trend traders, once you get there and you hold those positions, then you can typically see, that you continue higher from there. No guarantees, but it is interesting to see that as we get closer to these numbers, that we start to see the market's fighting a little bit to try to advance beyond them, as we have seen here in the last week. But that's not what I wanted to talk about today. Today I wanted to talk about the idea as we start to lift restrictions on different states and municipalities, what that actually means for the economy and for the stock markets. Now, I'm not going to comment on which approach is good or bad or right or wrong. I'm just going to comment on the impact of what's happening. I'll leave the discussion about good, bad, right, wrong to other people. So in order to know the impact of the lifting of restrictions, you have to look at data that's sort of high volume, high frequency data. So to get a sense of, okay, well, so if as the government lifts restrictions, are people actually getting out and doing more things? Are they making an attempt to return to whatever normal is going to be? So that's why I want to talk a little bit about some high frequency data. So for example, you'll see things like initial jobless claims. A year ago we had 213,000 in the month of May, and now the most current reading is that we had 2.4 million-ish initial jobless claims. But when you look at the month-over-month trend or the week-over-week trend, you see that the rate of jobless claims is improving, actually. So you can't get back to the new, to whatever normal is going to be unless you actually start that process. So initial jobless claims, while adding a couple million new people to the unemployment rolls in any given month or a given week is not a good thing. What we are seeing is that rate of people being added to unemployment is slowing down. So let's look at something else that's maybe a little more tangible. Box office receipts. I find that one fascinating in that, literally people stopped going to the movies. The box office revenue went down almost 100%. It almost went to zero. But month over month, people are starting to go back to movies while maintaining social distance. And week over week, we're sort of seeing the same thing. So again, these are data points that show us that as restrictions are lifted, people are starting to head back into some sense of normalcy, getting out and spending their money. And it's important, again, because you can't get back to where we were prior if you don't start the process of spending your money and getting back to work and all those sorts of things. So let's take a look at hotel occupancy. That's another one that I find fascinating. Hotel occupancy literally just fell through the floor. It dropped by almost half. But over the last month and the last week, we are starting to see hotel occupancy pick up, and the average revenue per available room that has continued to maintain strength. So again, as we lift restrictions, people start to travel. I understand Las Vegas is going to start to allow people to come in and go to the casinos and all that kind of stuff. Be interesting to see what happens with the hotel occupancy as this moves forward. Going back to the jobless claims. Now, there are 38.6 million unemployed people in the country right now. It's a horrible number. But there's another number, and it's called the job openings or JOLTS number. And that number to me is amazing because, for the better part of the last couple of years, I've been talking about how we have so many job openings. We had over 7 million job openings. And so, the economy was doing quite well because when you have so many job openings, that means that employers have to, compete for talent, which causes wages to go up. So people end up making more money. And so, having over 7 million open jobs was really a good sign for the economy. Contrast that with like during the financial crisis, we typically had 3 to 4 million job openings during the financial crisis, during that decade around the financial crisis. Well, the job openings number has only fallen to 6.2 million, which again is shocking to me when you consider what that says about what employers are thinking, which is they're thinking that, sooner than later, if you're just looking at the data, I'm not reading anybody's mind, but the fact that these jobs are still open and so many of them are open means that employers are anticipating, the continuing lifting of restrictions, which means that they'll be able to continue to hire more people, which will take some of the 38.6 million that are currently on unemployment and take them off unemployment and get them back to work. So I guess what I'm trying to say here is, as we start to lift restrictions and as we start to monitor, the impact that it has on society, on the economy, on the spread of the virus, that, these high frequency data points are the things that we're looking at really closely to make sure that as we make investment decisions, that we're making ones that are based upon math and not based upon things like fear or greed. If anybody has any questions about this or anything else regarding their financial affairs, estate planning, investing, how to apply for the Paycheck Protection Program, please just reach out to me, give me a call, give me an email, reply to this video, and I'll happily answer any questions you might have. But that was your update. I hope you enjoyed it. If you did, give us a like, give us a share, and I'll be back again soon with another Uncommon Sense update. Thanks for watching. If you'd like to be the first to hear of more Uncommon Sense updates like these, please click the subscribe button below. We'd really appreciate it. Thanks again.